What's up, traders? Over the last 2 weeks, I've banked over $15,000 from this mean reversion trade setup. It's something that you don't see too often and is often overlooked by traders. And I'm going to be showing you exactly what the criteria are to identify such trade setups, what the entries look like, the exits, and also the psychology behind this. So you're really going to want to pay attention to this video as we break everything down that has to do with identifying that mean reversion trade setup that happens almost every single day. So I'll see you guys right after this intro, and let's dive right into this video. So guys, we're back on the screens here, and let's look at some stats from Sierra Chart now. Over the last 2 weeks, about 8 trading days or so, we're up nearly about 20 grand now. The majority of this is from mean reversion. We haven't split them into different categories right on Sierra Chart. The stats are just the trades that we have. So we'll be going over those mean reversion trades that have yielded over 10 grand over the last 2 weeks. So let's dive into this, but first and foremost, we're gonna have to understand what mean reversion actually is. And the best way to do it is from a visual component. Now, the main asset that we're going to be looking at today is going to be the NASDAQ futures market. We can also look at the S&P, but specifically I've been trading this a lot more on the NASDAQ since it's been moving a bit better, especially in these slower market conditions. So we're going to be using mainly 2 different charts. We're going to be looking at a tick chart with delta, and we're going to be looking at a volume profile chart. So mean reversion, let's dive right into this. So this is a very simple image. It's a general, statistic normal distribution taken from errorstatistics.com, You can find this normal distribution just for a visual purpose. So mean reversion, is a trading concept where assets tend to return to their average or their mean level after deviating significantly. So traders use this to identify opportunities to buy low or sell high when prices are extremely stretched from their historical norms. So why I bring this up in terms of a normal distribution, this ties together the understanding of these statistics and where the volume profile comes from. When I talk about the mean, I talk about balances in the market that are defined by volume profile. The volume profile is how I can visually understand where markets have their balances, their compressive periods. If you consider where volume profile comes from on the screen, a normal distribution, it makes sense. When you get too far away from the mean, you can see here we start entering 3, 4, 5, 6 sigma and more. You get extremely overextended, and markets have a knack for getting back towards a balanced area. Now, if we take a look at this from a just general understanding of normal distributions, and as we move on, we'll relate it to the volume profile, which is going to be this chart right here. This is going to be the main chart that we're going to be using. We can draw a lot of similarities between the two. So first and foremost, when we look at this, the first standard deviation is approximately 70%. That should sound familiar because that's what a value area actually is, about 70%, It's been rounded up a little. So this is generally what we look at as the balance, And then the mean is going to be in the middle of it. But when I talk about the mean, a mean reversion, I'm just generally looking for a move back within a balance area, Maybe we get into the middle or the other side. You can see as prices get too deviated away, the tails get very thin, meaning that there's not too much data that's coming into those areas. When these prices get overextended, moves can be created by many things like overreaction to news, technical breakouts. After all of this happens, you generally have the larger players which are active in the heavier volume areas, they leave, leaving just the retail traders chasing prices, allowing for traders to get trapped, and then the big players allow prices to pull back into an area that has heavier volume realistically. It snaps back into that area of balance. So when we illustrate this point, we can take a look at the volume profile and start looking at similarities that allow us to identify where this mean reversion actually is, Markets, they move in cycles. They go from compressive periods to expansive periods, back to compressive. So what I'm trying to do is I'm trying to find the moment where prices leave a compressive period, get into expansion, and try to come back into said compressive period. This is where we start stacking up auction market theory. So as we can dive into this, let's just draw out the similarities as to what this mean looks like in terms of volume profiles. When we talk about volume profiles, we talk about balanced areas, right? Balanced areas are going to be our general large compressive periods that have a mean where prices would want to revert into. So if I'm looking at this, I can start drawing out these general larger balanced areas here where our mean is somewhere right in the middle where the heaviness of volume comes from. So these are general bellies. These are bellies that shape up that have a huge stack of volume within them where prices call home, right? Where prices want to stay within, where there's a lot of back and forth, buyers and sellers are generally equal, and outside of these moves, you have that expansive period that allows for momentum to carry through. Now the question is that momentum going to continue, or are we going to be able to find something that actually reverts back into the balance, right? Towards the mean. So what I'm trying to look at from a just general basic understanding, if we draw out, let's say this is our balance, this is a compressive period, right? What I'm looking for at this point is I'm trying to identify the key extremes of a large balance. So if I look at prices, I'm looking for large drop-offs in price, right? Where we have a larger area, right? On the NASDAQ, I'm looking for regions that are over 150 points generally. So this one's a little easier to define over here. So it's a very heavy general balance where we can try to play that kind of mean reversion move from. But also there's an area that has slightly changed here on the NASDAQ. So we can grab it like this, and there's like a minor region here. I'm not going to be super interested in the minor region. What I'm looking at is I'm looking at these key extremes over here, right? I'm looking at the extremes of the general larger balance. So what I'm doing right now is I'm breaking down this 400-day profile here on the right-hand side. This is the gray profile, and we'll be using individual profiles. We'll be using delta profiles as well as the footprint to understand how to identify step-by-step this whole mean reversion setup. Now, first and foremost, we have to understand what it is that we're looking for, right? From the basics of the setup itself. If I understand that this is a general balance and I have the key extreme at the top and at the bottom, when price is inside of this area, we're in a compressive period, right? All is good, prices are at home, quote unquote, and they want to stay within that area. Now, there are going to be points where prices expand outside of these regions. When prices expand outside of these regions, right, one of two things can happen. They can continue, right? Or they can curl back towards this larger balance, and this is the mean reversion setup. So what I'm looking for, number one, is a move through a large balance, meaning excess, whether it's to the upside or the downside. This time I'm just drawing it to the upside. So I'm looking for excess. After that excess move, I'm looking for traders to fail on the continuation of the buy side, which can happen with absorption, right? Something that we'll talk about very soon, where delta and order flow are going to be our friend. And we look for the failure to really continue and try to revert back within this area where we want to trigger the short to come back into the heavier balance. Because when we move outside and create this excess move, if we start failing, it's telling us that the buy side that actually created this expansion isn't really strong-handed anymore. And if anything, the late retail crowd, the weak-handed traders, they're coming in trying to see if we can get that breakout, but eventually prices start reverting back into the larger balance where the strong-handed traders want to get more active. So that's the general setup that we're looking for. Now, if we tie together volume profile and break this down a little more, we can get a better understanding of what it is that's going on. So we've drawn out a few of these general balances. I'm going to use a different color though. We've drawn out a few general balances here. This is a major one to take note of, right? There's a minor level, but again, my point here is I want to focus on the major large balances. I don't want to get stuck too much in the minor levels that might be within. This is why this mean reversion trade setup, it can happen on a day-to-day basis depending on where we're trading in relation to the larger balance, or it could happen maybe once, twice, 3 times a week, right? It's dependent on if we trade in the extremes of that larger balance. So if I'm using this immediate larger balance, the top band is 21,850, the bottom band is 21,650, let's say, right? A 200-point area. That comes into our qualification for a decently large balance. So what I'm trying to do is on a day-to-day basis, I'm trying to identify excess moves that fail the top or the bottom band. So in many such cases, we have an excess move over here that fails, we have an excess move over here that fails, over here that fails, over here that fails. Ultimately, this one fails, and then now we're starting to actually catch that bid. So what I'm looking for in these scenarios is I can look at individual sessions to give me an understanding of where heavy volume might be, where light volume might be, but I'm looking at this in real time. So when I see an individual session start shaping up and we start breaking to the upside swing, that's where that excess is going to be created, and then we can start looking more so at order flow to give us a real in-depth understanding as to if we're actually going to fail back within or we're actually going to turn back and continue this upside momentum. So from an order flow perspective, now that we understand, okay, I'm just looking for the key extremes of these distributions, from an order flow perspective, there's two aspects that we want to look at. We can look at the delta profile, right? The delta profile is on this tick chart over here. I can do us one better and pull up the overall delta profile and understand what's going on here. We can take it step by step. But the key right now is we're using delta in combination with price action. So the delta profile and the footprint are going to be the key players for the order flow confirmation of this trade actually setting up. So let's dive into some examples here over the last several days of how this mean reversion trade actually set up. So let's take a look at a few of these trade setups. So this is from Friday, June 6th, right? And we're trading in and around a key area. So we're trading at 21,850. And this is a very good example because there's an example of taking a loss and then the next mean reversion trade actually setting up properly to a certain degree. So 21,850, as we said, is going to be the top band of this distribution area. And as we come up into it, what I'm trying to do is I'm trying to identify if there's an excess move that gets created. And then what I'm trying to identify is if we're actually failing that excess move. So a combination of order flow, how can we dive into this a little more? Now, number one, even from a price action perspective, I don't necessarily want to call tops. This is a common mistake that we'll talk about in a second, but I don't necessarily want to say, okay, this is going to be the top. I want to see that there's going to be information that we're actually failing into this area and then reversing, meaning trying to break back under this region. So this larger expansion, selling rallies back into it, has more of a confirmation. So this trade was very premature, right? This is a mistake that I made and I took a loss on it. It's fine. So what does that look like from an order flow perspective? Number one, the first thing I want to look for in terms of a qualifier into those areas as I'm setting up some kind of idea of a reversion is when we make an excess move on a price action perspective, we can look at, this is the day itself here. What I'm looking at right now is a clustering of positive delta that gets stuck at the top. When this happens, this is the criteria of absorption. Absorption happens when there's late buyers coming in aggressively and passive sellers continuously reloading, trying to hold out against those guys. So when I see this kind of criteria, when there's heavy positive delta clustered at the top like this, that gets created after several failures, that's going to be the first criteria for me to look at this and think, you know what, there could be some kind of breakdown. From a price action perspective, we can look at it and think, well, okay, if we undercut back under this level, rotate back into it, we can sell into it. That's going to be a price action criteria, but we can do a better job at that, and we can bring in the footprint to give us more of an understanding of how these things actually set up and where that exact trigger point is. So let's bring the footprint into the screen and take a look at how that actually sets up here. Okay, I made a mistake. This is from June 9th. It is, whatever, it doesn't matter. So from a footprint perspective, this is what I'm looking for. Now, when the footprint creates movement, we are looking at delta, right? Each candle has delta here on the right-hand side. And what I've done is I've color-coded this and given kind of like a heat map of brightness when it's very aggressive. So I'm looking at very aggressive blue and red delta. What does this mean? Now, red delta generally is going to be very aggressive attempted selling with passive buying trying to come in. And then the blue delta is going to be very aggressive attempted buying with some passive selling trying to come in. Now, as prices go up, right, directional order flow movement, generally what we see is bright red getting stuck into the lows and rebidding back above. So when we have these bright red delta prints and prices continuously push higher and higher, these guys are kind of getting trapped, and what we're seeing is support structure trying to hold out. So if I see a scenario like this, I know that generally speaking, the potential reversal isn't quite there yet. What we're seeing is supportive bidding, passive bidding continuously moving up, and it's the same thing with aggressive blue delta. So what do I want to see? From a footprint perspective and patterning, what I want to see is if there's a move, like a stepladder move like this with heavy negative delta holding support structure, what needs to happen is the most recent support structure delta, negative delta, has to actually break. They have to start offering below like 10, 15 points on NASDAQ to show me that they're actually re-offering and the aggressive selling's actually coming through. So if I take a look at this, there's a sequence where I think a mistake that a lot of traders make is that they look at these areas, and when I see 200 negative delta, for instance, on NASDAQ, it's a very, very big number, right? Large numbers start going from 85 plus. So if you're going 225 approximately, or 215, I should say, that's very, very big. So when I see something like this, and a mistake that I made here, and a lot of traders do make, is that when you see massive delta that comes out like this, you're like, oh my God, okay, boom, this is the sell. But I want to make sure that we're actually breaking through all the support that was left above, especially when you have all of these rotations and there's a lot of negative delta and positive delta getting trapped and rebidding. You know that if there's going to be a mean reversion trade, it's going to have to crack under that area to actually turn prices around. So, you know, I did take this short. It was a mistake because realistically, if I look at this, I would have needed this area overall to break. Right, I would have needed this area to break to actually show us that there's a reoffer to take control of that sell side for that mean reversion move. So as we continue higher, what happens is this kind of like stepladder situation over here, and then you have all of this clustering of this accumulation over here of negative delta. So the question is, are these guys actually trapped or holding out? So this is at a higher price of the stepladder here. This is why when we actually break these areas down where all this negative delta is accumulated at the bottom of the rotations, when you get an aggressive breakdown with some heavy sell side, they even break through this area, that is going to be the trigger point for that mean reversion move that allows prices to actually turn back over. That's going to be the trigger. When I break that structural support based on order flow and there's aggressive selling that's coming through, the pullbacks into those areas, right, the pullbacks into those large sellers, I want to be a part of that sell side. I want to sell those areas. So if I'm selling 862 over here on the NASDAQ, right, I don't get like too much out of it, about like 40, 45, 50 points out of it, which is fine. But that's the attempted turning point of that mean reversion. We've taken multiple trades like this over and over again, and there are slight nuances to these trades, but the biggest trigger that we've got is identifying where the momentum to the upside actually gets broken through from an order flow perspective. So step number one, like I said, the accumulation of positive delta that gets absorption into the highs, right? If I'm trying to buy it, it's going to be negative delta at the lows. And then where we have the breakdown of the upside momentum from order flow, that's going to trigger that turning point and that mean reversion move that generally happens in these markets. So we've had a few more trades like these. Let's go over through some of the other trades that have worked out to a larger degree in some cases, right? Obviously not everything's picture perfect, but this one is from Friday, June 6th, the mean reversion type breakdown. So again, what are the criteria? I'm trying to see if there's an excess move above the major top of the distribution. The failure and right, the accumulation of positive delta plus the order flow failure of the movement higher, that's going to trigger that potential move. In this case, right, last time I showed you a different delta. Last time it was this delta. It's the same thing. If you can look at both of these and try to find some similarities, what you're getting is accumulation of absorption into the highs. So again, what does this look like on the footprint perspective? We make, on a price action perspective, we make a push up, heavy accumulation of positive delta. ultimately we fail, where do we go from there? So where do we go from there? Again, looking back at these is like a little review, and you can pick out some mistakes that may have been made. Now again, as we go up, you can notice where the delta is actually holding prices out until we actually get some kind of sell side press that's holding. This sell side press that actually held was maybe a trigger for me. Now, this is where the mistake kind of came in. So if I'm looking at this from, I guess, the better way to do this is wait for some of these areas like this support structure of heavy delta over here, or this support structure of massive buying that's coming in to break. Once that breaks, you can look at this in terms of a mean reversion move and sell back into that area for that continuation. I jumped the gun a little. I was looking at some of these sellers into these areas and a little more of the depth of market, which gave me a slightly earlier entry. But if I was a little more patient, waiting for that break and reversal after we destroy a lot of this support structure, especially over here, then I'd have a much better trade, because I got taken out at break even on a few of these over here. We got a nice move down here, almost into the bottom tick of this. Maybe we got lucky, but held it out for an extremely long period of time. And what happened over here was incremental lower highs. So after we break all of that prior order flow here, we come back into the area that broke it. They sell into it. At that point, you have higher confidence that this trade is going to play out. Once these heavier sellers start taking a swing at this, that's where that breakdown is expected to happen. So yet another idea and criteria broken down in terms of the mean reversion trade. But you know, even looking back at this, there are some things that I could have done better. Here's one more day of the examples, and then we'll start moving along in terms of exit triggers. So we've talked a lot about entries and how these things set up, but what are the general exit triggers? Where do I want to target? So this was a fantastic day. We managed to find that top overall in this market. Did I hold it for the entirety of the move? Not necessarily, but a nice 160-point move based on that mean reversion criteria. Now, there are a few things that I do want to go through over here that may make this trade higher probability or may make it better, but it's still the concept of us creating an excess move and then failing. So the first excess move that we created here got rejected. This is why I was looking at this and this rejection over here as the potential turning point in this market. Now, we did pretty well. Some of these got taken out at break even, and we'll go through this trade because, again, it's at that 850 area. And if we look at this day from a delta perspective, right, somewhere around here, we get the accumulation, some actual heavy selling, heavy set selling. Now we get the move over here, and this generally isn't the best of qualifications, I would say, but we'll look at the order flow construct of how to find that top with that mean reversion based on this, because we do have a lot of buying that gets trapped. But maybe the better trade might have been actually the failure back under the major balance top and then looking to sell into it. So let's digest both of these trades and the potential of this third trade opportunity to break this down, and then what looks like exits, right? We'll talk about exits and continue on with the breakdown. So in this area, right, we have a lot of selling. Now, this is the criteria. We get this excess move barely above 850, and what I see is very, very thick selling. So remember, 200, 100 on the NASDAQ is some pretty onset selling, meaning that the selling starts somewhere over here. Once we get a few rejections, my idea is that this excess move is actually failing, and we're starting to get that kind of mean reversion move because we undercut the prior support structure. So I'm looking at this from the perspective that we're actually going to get that mean reversion from that move, and it doesn't work out that poorly, right? 858 approximately, I think, was the entry, all the way down about like 50 handles. The rest of it gets taken out at break even, no such luck, right? The buyer doesn't want these sellers to continue. So the question is, what happens on the move up on the massive mean reversion move, calling the top at 920 on NASDAQ before it spills 300 points? So let's take a look at the way up. Right? On the way up, we're looking at the order flow construct, and you have this support structure over here, mainly this kind of, I think this was an accidental trade, let's forget about that, but mainly we have this kind of support structure over here that's building out. What's the criteria here? When I see all of this imbalancing setting up like this, I know people are trapped, so there is the potential for these guys to swing higher. So that means that we would want to break this area with some degree of significance to actually start selling into. Now, here's one of the kickers. you have a massive seller that comes in, right, fails, and then we have another massive seller over here that actually breaks it. At this point, these massive sellers that are actually undercutting these lows, this for me should have been a higher probability trigger to actually get into this momentum move, right, on the pullback into these areas. I also could have waited for a bit more of a breakdown, but these huge sellers over here, the fact that they're rejecting gave me the confidence to identify that there's going to be some kind of turning point. Now, if I could have done this maybe a bit better, I could have waited for this real breakdown, sold into this area, right? A little worried about this. But this pullback into the 920 at this point, after these guys get undercut, that's going to be where that turning point is, right? Heavy selling is actually holding prices down. Now, if I wanted to be even more confident in the move, I would have waited for the key auction extreme to break down, right? So the key auction extreme is 21,850. So if that breaks down, then I understand that there's going to be that heavier onset mean reversion that's expected to pull us lower. So right into that area, we have monstrous selling, massive selling that actually creates a move lower by about 50 odd points. So this is a criteria that confirms that we're actually expanding back within that larger balance where the mean reversion makes sense. So back into this area, once you start to see rejections, and this is a heavy seller, you got 570 on the sell delta-wise on the NASDAQ. That's almost a market sell back into these guys that actually broke lower. This is probably the highest probability mean reversion setup that you can find, with the expectancy that the expansion continues even lower. We talked a lot about entries. We've gone through a lot of different trades. So what creates the exit trigger and the idea of actually targeting a place? So targets, they're based on key auction extremes back within the major distribution, as well as very prominent clusters of delta. So if I'm looking at areas, I'm looking at prior clusters of delta that may have been created throughout the day. So in this case, we can take a look at it. It was approximately around that 700 area, and then you have this key auction extreme at 750. So 750 to 700 is going to be a major target on that mean reversion setup to the downside. So I'm looking at key auction extremes as targets, as well as key delta that has clustered, that's created either support or resistance most recently throughout that day over the past few days as a target. So now that we've gone through a lot of this breakdown, we've walked through trades, we've talked about the entries, we've talked about good trades, bad trades, targets, whatever it is. Let's take a look at some of the mistakes to avoid in this particular setup. So the emotional control during the setup, when you have the triggers, you want to let them play out. That's why we have stops. This is one of the biggest things I've learned, right? Not getting too twitchy in the rotations of the trade. I know a lot of people, when they see trades balancing, going back and forth, their emotions heighten as the rotations start to increase. But realistically, if I have my triggers, I'm just following my rules, and if I get stopped out of it, then that's just a part of the trade itself. I see people cutting positions way too soon, and as you move into profit, you want to understand what your targets are. This is why we talked about the exit criteria, so that you can have a goal in mind rather than trying to look at the P&L. I think it's a massive mistake. Mistakes that I've made in the past with this pattern, right? Traders like to call tops and bottoms simply because it's gone too far to the upside or the downside. It has to come back, right? That's what everyone thinks realistically. But what about waiting for the criteria to tell you that it's going to reverse? Now, I've shown you that criteria, and that's the only way I want to trade this mean reversion. I can look at this and say, oh, like it's gone too much, like it has to fail, blah, 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 but that's not going to get me anywhere. I can keep selling rallies, selling rallies, selling rallies, and I can keep getting stopped out. Markets can keep going. There isn't a consistent rule. For example, if it moves like 4, 5, 6, 7, 8 sigma, it's expected to reverse. Now, naturally, if you get that extended past these distributions, there's most likely going to be a reversal area. But where is that going to be? Wait for the criteria that we've just broken down. So I know that when you get into a trade, people look at the order flow, they look at it shifting, and they start trying to make up their minds. One of the biggest things that I've learned is it takes so much effort for me to identify where the trade is, right? It's a little mentally exhausting. By the time I pull the trigger, if I have to keep thinking about this trade based on, oh, where should I get in, where should I get out? It becomes overwhelming, and usually I make the wrong mistake. So that's why I have a stop and I have a target. And once we start moving towards that target, then I can start making better decisions realistically. So let's break this down fully and understand how to spot this in the live market. Let's go through a checklist and wrap this up. So number one, what we're looking for is the key balance extremes. We've gone through this. We can identify where those key balance extremes are. And when we even fail to move into a balance, just as we have on the overnight, this is setting up for a prime example of a mean reversion. Number one, know where your key balance extremes are. This is going to be the starting point. There's no trade if it's not at a key balance extreme. You wait for the excess above or below that key balance extreme. You want to identify the delta on the profile. Is there actually going to be a lot of absorption? In this case, the last three sessions, there's a lot of absorption. So even here on the overnight in the EU session, you can kind of identify this trade. So is there absorption in the excess? Is there an excess? Do we make a move through the key auction extreme? And then bam, we move into the footprint, and we want to identify how the reversal of the current trend sets up by a breakdown of the immediate support or resistance based on the imbalances. So a lot of mistakes have been made in this setup, right? I'm still learning myself from them. As you saw, a few trades that didn't go fully as planned, but one of the biggest mistakes that I can't stress enough is trying to call the top or the bottom. Wait for these specific criteria, and if there's no sellers that are breaking under, you don't want to sell. If there's no buyers breaking above, you don't want to buy. It's as easy as that. If there's no excess, I don't want to call tops. If there's no reversion back into the balance area, I don't necessarily want to look at it. So that's what I look for, and that's what I look for before pulling the trigger. So I hope you guys got a good understanding of this overall setup. We've shown you some examples. And, right, there's more trade setups like this. Don't forget that all these trade setups are available at TRADEPROacademy.com on a day-to-day basis. We sniff them out and take them. To add to that, if you want to learn more about Delta, auction market theory, these setups, we got a free PDF in the description down below. And let me know what else you're interested in seeing. So I want you guys to hit that subscribe button, hit that like button, and check us out at community.tradeproacademy.com for our free trading room that's filled with a lot of education. I'll see you guys there, and I'll see you in the next video.